Let's talk about your experience and your qualifications before we really get into the meat and potatoes here. Why are you qualified to talk about this subject?
The one thing more boring than talking about the Fed is talking about me and my background. I can assure you of that. I was a professional economist for probably 20 years before becoming a police officer. I worked for a couple of banks in the 80s. When I got out of business school in commercial banking, and then went back to grad school, studied economics, earned graduate degrees from the George Washington University, which is what we used to call, and some places still call, the Rational Expectations School, which is sort of a descendant of the Chicago School of Thought, which of course is an offspring of Austrian school thinking. So I was very lucky and indeed privileged to be able to go to such a place and studied, the full panoply, right? Microeconomics and macroeconomics. My specialty was finance and international economics, but went to work for the federal government after that, a couple of agencies, international agencies. I worked for the White House for a couple of years. Went to work as a free market advocate of sorts for the American Bankers Association. I worked for them as an economist for a bunch of years. And then a buddy of mine and I had our own business educating bankers for a long time. I also, along the way, taught economics not only at George Washington, where I was in school. It's how I paid my way through school, of course, like so many youngsters do. But I had the opportunity to teach at Nova, Southeastern University in Florida, and at Barry University in Miami. Terrific experiences. And so I guess in that sense, I've been around the block. I've done some research on the banking industry that had been referenced by the Fed. I've met with the Fed board in their austere boardroom itself. It can be a bit of an intimidating place, even if on some level you might think it's a clown show. But once you're actually in the room, I can assure you that they do their best at being as intimidating as possible. So I worked as a civil servant economist, not as a political appointee. Gotcha. In the George Herbert Walker Bush administration. That's going way back. Okay. W's dad, in the days when he said, "Read my lips, no new taxes," and then of course went back on that pledge, and it was like, oh my God, what are we dealing with? So, yeah, I've had my share of political disappointments. When you look back at 2007, we were all concerned about, well, for the decade leading up to 2007, we were all concerned about Fannie Mae and Freddie Mac. The fact that these were gigantic trillion-dollar institutions that were guaranteeing trillions of dollars of mortgage-backed securities and did not have the capital to back them up. They claimed openly, the Fannie Mae and Freddie Mac, that they did not have the backing of the federal government. And the reason they claimed that was to avoid regulation by the government. They did not want the Fed to require them to have significant capital on hand because capital is expensive and would slow down their business. So they went around telling politicians and the American populace that they were not backed by the federal government. But lucky for them, nobody in financial markets actually believed them. On Wall Street, everybody knew damned well that if the crap hit the fan, Fannie Mae and Freddie Mac would be made good by the Fed or some combination of the Fed and the Treasury Department. And when that happened, mortgage-backed securities were purchased by the Fed for the first time in 2008, and then in large quantities. And these institutions were kept afloat. And even to this day, they have better capital than they used to. But even to this day, they do not have anywhere near the capital that they ought to. So that's just one little story that illustrates the fact that, having the Fed as a big brother is a very good thing. It makes your business a lot cheaper to conduct because it's a lot cheaper to have a big brother backing you up than to have the capital that you need on your own.
Yes. correct me if I'm wrong, both Fannie Mae and Freddie Mac were created by the federal government, weren't they?
Absolutely. They operate pursuant to federal charters. Of course, they claim to be private sector organizations. We can argue about whether, what the definition is of a private sector organization. They have private market, shareholders. Their stock is traded on the various stock exchanges around the world, sure. But their board is in part appointed by the President of the United States and cleared. Let me point out one example. When I was in Washington, the head of Fannie Mae, the chief executive officer, was a professional lobbyist. Now, you might wonder, what's the background of most giant financial institutions? It's typically a banker who grew up in that organization or some other organization. If you have a financial institution, the head of which is a professional lobbyist, you see where I'm going.
Yes. So these institutions, which were created by the federal government, their executive officers are appointed by the president, and they're going around telling people that they are not backed up by the federal government.
They would scream bloody murder that they were not backed up by the government because they wanted to avoid regulation and especially avoid capital requirements.
Interesting. So they are given...
But they were able to raise money
yes,
at something like 20, 30, 40 basis points above treasuries. So if the Treasury Department was borrowing at 3%, they would borrow it at 3.25%, illustrating that nobody believed them when they said they were not backed up by the federal government.
Yes.
It's not as easy to conduct monetary policy as it used to be. And so the Fed finds it necessary to go in and buy huge volumes of securities from the primary securities dealers through the Federal Reserve Bank of New York in the basic markets in New York City. Huge volumes.
Yeah.
And the problem, of course, is that such transactions, the effect of such transactions are very difficult to predict. They did have experience in the Great Recession that did not blow up into a large amount of inflation. And they believe that they can conduct even more of that today without getting to inflation. But that's what's obviously has blown up on us over the past year, right? And very difficult to sort out. Indeed, there's no perfect way of telling, is the inflation that we see today, of all the factors that play into that, too much federal spending, supply chain interruptions, bad energy policy, bad monetary policy recently, difficulty controlling monetary policy because of the Fed funds market being without reserve requirements and being down to zero in the Fed funds rate. Those are two different issues. Or bad monetary policy during the Great Recession. There's no real good way of teasing out how much of the inflation we see is due to those various factors. We can make educated guesses, but I would submit that when even your most nerdly economists in, brilliant teams of humans can only make educated guesses about what has gone wrong, this is a market that we probably shouldn't be in the way that we're in it.
Yeah.
The amount that's at stake is huge. Huge. Not only is inflation very detrimental to the way the economy works, because the way the economy works is to read prices. And if you're screwing up all the prices, things just don't work that well in terms of efficiency. But because various markets are affected at different rates, for example, we see asset bubbles created when we have a lot of inflation, but labor market prices, wage rates, don't come up as fast. So because you see markets affected at different rates, you've got these disparities in how different types of people are affected. I'm not a big class on class guy talking about, Marxism, but you got to be a doofus not to be sensitive to the notion that during an inflationary period, if you're not heavy into stocks and you're just a wage earner, you're getting hammered.
Yeah.
That can't be a good thing. In addition to that, you've got the federal government reacting to it, right? And
yes.
One of the things that you have to be humored, and this is not a real humorful topic, but one of the things that you've got to note is the irony of the Fed feeling like it's got to clamp down and probably sending us into a recession, quite possibly a recession that we're already in. We should probably talk about that.
Yes.
The Fed feeling like it needs to clamp down and possibly send us into a recession. And the administration talking about, well, maybe we need to put out more money to help people, to accommodate people's needs for more money during these trying times.
Yeah. It's insane that they keep repeating the same exact mistakes that got us into this situation. Now, one last point.
They can't help it.
Yes.
It's this, the turtle and the scorpion, right? I mean, this is what I do. Where I think you and I are going is that less intervention by the federal government, whether in the name of a central bank or the Treasury Department, less intervention from the federal government is something that we could live with.
Yes. So to one of the points you just made, all these powerful people in charge of the Federal Reserve, your Janet Yellen in the Treasury, Jerome Powell, and all the other eggheads that the federal government appoints to these positions, they clearly don't even really understand the situation they are in clearly, right? Is that kind of what you were getting at? Yes.
Best efforts notwithstanding, I'm not a big fan of suggesting that these people are evil or in some sort of a conspiracy. For the most part, they are doing the best job they can inside the framework as they understand it. They truly believe that the world is made better by big dramatic bets made by our central bank.
Yes.
I believe they are wrong about that. But they do believe that they can smooth out recessions by making these huge money plays. And because they've gotten themselves in a situation in which it's increasingly difficult to pull that off, they may have to make huger money plays every time they do it.
So we're ending up into a point where it's just a feedback loop. In order to do anything, we just need to gamble bigger, bigger, and bigger every single time. And it's bringing us to lower and lower lows for the average person. So
I think that that's right. And I think that that's why we need to replace the monetary policy that we have. You and I had talked about this briefly earlier. We need to replace it with a rules-based system instead of giving all of this discretion to a handful of individuals. And I think that your basic two options, I would view one as a stepping stone on the way to the other. One is to give it back to the commercial banks and end the notion of having a central bank altogether. Or I should say, getting rid of central banking altogether. And the other, which I would view as a stepping stone toward that, is to simply replace the discretion that the Fed has with a rules-based system that says we're going to target money supply and increase it by a fixed rate every year. Whether it's 2%, 3%, or 4% doesn't matter as much as absolutely being marrying to some number. And for money supply to be targeted, the Federal Reserve Bank in New York or any other big financial institution could be used to conduct the transactions to try to make that happen. and just replace monetary policy with a laptop.
Okay, so we've talked about a lot of the problems with the system. So let's explore solutions more. You have a plan, don't you?
My plan would be, as I said, to replace it. I do, thank you. And insultingly, as an insult to the Fed, right? I put together a video that's all like 2.5 minutes. So if any of Fed economists were to look at that, they'd be like, "Oh my God, this guy thinks that we're so stupid to replace the whole thing in 2.5 minutes." I don't mean that at all. It's just I can outline what to do about it in 2.5 minutes, right? The real challenge is the politics of it, not merely the details of it. But the basic idea is you got to take away the discretion of the Fed and replace that with some fixed rule. And then you need to replace the regulatory framework that the Fed has and replace that with commercial banks being given options as far as their regulatory structure. Even today, banks can typically choose, by virtue of what type of charter they have, who is their regulator. But I would add to that, banks absolutely need an option of no regulator whatsoever. I'm doubtful that too many commercial banks would jump into the zero regulator idea right away because, of course, they feel like they need a good housekeeping seal of approval. But you could certainly imagine someone opting to have no regulation, but hiring, their accounting firm to do a more robust annual report than they do now, as something in lieu of federal government or state government regulation. You could absolutely imagine that. And, as far as the Federal Reserve banks go, the 12 regional banks, a lot of them, and they are private sector owned. They exist pursuant to a federally issued charter, of course, but they're private sector owned. I would spin those off and tell them they're private organizations. They provide a lot of services. They settle check transactions and other payment services to their commercial bank customers. If their commercial banks want them to regulate or audit them, that's a way that they can continue to conduct business. And those that aren't adding enough value can go by the wayside and go bankrupt or merge or whatever is their best exit ramp. And of course, I would take the Fed balance sheet and I would transfer it on budget. In other words, I would take that $9 trillion, fold it right back into the Treasury Department and tell them, you can't spend money without federal legislation. There's no great silver bullet to stop a bank bailout or to stop the bailout of any other, to stop a bailout of Chrysler or General Motors or Ford, right? We've learned these things the hard way. But at the very least, we can make it harder. One of the reasons we have the bailouts that we've had in the past is because it's so easy for the Fed. I mean, if you got a balance sheet of $9 trillion and can create money with a magic wand, it's not hard to bail out a securities firm or a commercial bank. And if you're their regulator, it's not hard to make a phone call to Wells Fargo and explain to them that they're going to take over this crappy commercial bank that you're worried about in Atlanta. I'm trying not to name names. And you're going to do it by Friday as a personal favor to the Fed. Those are conversations that I appreciate, as I'm sure having been well-intentioned, but we simply cannot do business that way in a country that depends on free markets for economic growth and for efficiency. So 100 years ago, I used to spend a lot of time, I used to work with the American Bankers Association. And one of the things that I found interesting is that this was a very much free market organization. We were dead set against bank bailouts, and we were representing the banks themselves. How's that for weird? Because the banks, the banks didn't want to be seen as someone who would potentially need a bailout. So we spent a lot of time coming up with ways that a bank can certify that it's ready to go bankrupt, what we used to call a living will. so that if a bank got into trouble, there would be ways to dispose of the assets without the Fed bailing them out. That's the kind of thing that we need. We need to rely on. We need to rely on market mechanisms, private sector mechanisms to resolve institutions if they get in trouble and get away from these bailouts.
So the ultimate solution then is to end the Federal Reserve System.
I truly believe that. And I think look, we all tolerate half measures when we have to, yes. Right? So even though I say you got to end the Fed, and I would love to do it by Friday, if we were to just do any one of those things, I'd be happy about it. Even if you could imagine, even if the Fed continued to exist and you took away their monetary policy discretion and replaced it with a rule. No, it's not everything we want. That'd be a hell of a lot better than the swings and money stock that we have today, right?
Right. So now a lot of we've been making a point at LP National to talk a lot about ending the Fed. Now, what's the actual roadmap to doing that?
I think the roadmap is probably without a crystal ball, right?
Yeah.
I think the roadmap is probably take away.
If I could interrupt for a second,
please. Let's
make some assumptions here. Let's assume we actually had the ability to enact this roadmap. Let's take that as an assumption, and our other principles in like free markets are enacted as well. Let's take that as an assumption.
What you want to do is take away the Fed's discretion in terms of monetary policy so that people can get used to the idea of not having an all-powerful set of 12 people that we trust with setting the course of money stock. Because until and unless politicians get comfortable with that idea, you're not going to be able to take the next step. Does that make sense?
Yes, it does.
Because I think for a lot of people, getting rid of the central bank altogether feels like flying without a net.
Right.
And I can appreciate
understandable
that.
To an extent.
I think it is understandable, particularly when you look around at all the other systems of governance we had and you notice how much is driven by fear. I spent a dozen years in the criminal justice system. I can tell you that most of our state legislatures are driven by fear of things that they probably don't need to be so fearful of, right?
Right.
And we don't need to contribute to that. But I think people would get comfortable if they could see that a rules-based system for monetary policy would be a very good idea. And after a certain period of time with that, you could see where you'd be able to do without the Federal Reserve Board itself. Now, the regulatory function is an important one. But like I say, if you gave commercial banks the option of getting out, you could see where you could live without it. For example, as another example, which is unrelated, one of the things that bothers libertarians like you and I, Connor, is for example, entitlement like Social Security.
Yes.
Right. And we would like to live in a world where we don't have a program like this, where the federal government mandates this and that, yada, yada, yada. Right.
Yes.
But if you were to shoot it on a Thursday night, you can imagine how much fear that would cause. And I think the stepping stone to getting rid of it is to give people an opt-out, an exit ramp from the system. So you shrink it until then one Thursday night you can shoot it.
Right.
And I think the same thing with the Fed. You give commercial banks the option to be regulated by someone else or by nobody at all. And you see where the rest of the Federal Reserve Board functionality is in effect gone. And then you pass legislation that says, we can't be bailing out people. Now, having said that, I realize I didn't say that in a very sophisticated way, but it's partly because you and I both realize that there's no such thing as legislation that can't be overridden by future legislation.
Yes.
Again, there's no such thing as a silver bullet in this regard.
No, there is not.
But if you had legislation that took away the Fed's monetary policy discretion, that gave commercial banks the option of getting out from underneath Fed regulation, and you took away their balance sheet, and you took away their discretion for bailing out institutions, functionally, they're gone. Then, like I say, on a Thursday night, you can just shoot it and nobody would miss it. But I do think that that's a fairly long process. And by the way, that is how so many things go in terms of federal legislation. People learn to work around it, and then you figure out that the law really doesn't have the teeth that it used to, and now it's just a pain in the ass, and then you shoot it. Yeah. We do want free market competition among currencies.
Yes.
One of the things that concerns me is that the U.S. currency has been winning that for a long, long time, which is great, which is fine. Mm. But we have won it by so much. We have not enough incentive to make it better.
Right.
You know, we don't have a really good competitor on the horizon. You know, when people talk about, you know, we've screwed up our currency so bad we're going to get replaced. Really, by what? Now, we're all optimistic that there will be an emergent facility to rival the dollar. I remain optimistic, not in my lifetime, maybe in yours.
Hopefully.
Hopefully, right?
Yes.
And these things can go relatively quickly. I mean, you know, it could be in my lifetime. But whether it is or not, it does not look like, as dumb as we can be, as bad as our central banking system can be, it does not look like we're likely to be characterized as dumber than any others anytime soon. If you look around the world at the other currencies, man, I'm not exactly. Yeah. Look out that window and let me know what you see. I'm not optimistic about any, you know, what, right. The euro? No, I'm sorry.
Yeah, the euro's been at negative interest rates for
NIMBY? No, and I'm sorry. The pound? No.
As you said, the solution of what is a real rival to the dollar out there isn't really as cut and dry as it may appear.
No, I wouldn't. I wouldn't bet on China with your money, Connor.
No.
I truly believe that is an economy that is going to be, it arguably is in trouble right now.
Yes.
But will be visibly, noticeably, you know, publicly so relatively soon. And at my age, I count relatively soon as the next 10 years.
Right.
I would not bet on them at all. I would not bet on the Japanese economy. Nope. The Russian economy is hardly worth a conversation. But I do worry. I worry about the Chinese economy, not because of some weird affinity, but I worry about what they do in reaction to that.
Yes. When
economies go bad and aspirations are dashed, politicians do some weird shit. And so I worry about that a lot because they'll still be large and powerful and interested in becoming like the United States. And there are a lot of things that we are that I don't want China to become like. You know, I want us to be a lot less like we've been, not China to become a lot more like we've been, right?
Yes.
So, you know, for all the bad decisions that we have made as far as military interventionism, imagine if China gets the bee in their bonnet that they want to be like us. Yeah, just let that sink in. That's a scary proposition.
It is a very scary thought.
It's a very scary thought, particularly because of the sizes of other militaries around the world that may not like where that is going, like Saudi Arabia. But to your point, we do want rival currencies. I don't see them coming out of central banks anywhere around. I am fascinated by Bitcoin, and I really want to see how it plays out. And I wouldn't even say we're to the point yet where it's appropriate to characterize ourselves as either pessimistic or optimistic. we're not even to that point yet.
No.
We're at the point where we're just watching.
Yeah.
Right. I mean,
trying to hold on to our butts in the sinking economy.
When you watch the beginning of a marathon race, do you look at how the performers have done over the first 5 miles and say, I'm optimistic or pessimistic about this guy or that gal? Or no, I mean, you're not seeing anything yet that's all that relevant. And I think that's where we are with Bitcoin and the other, what I would characterize as emergent currencies. So I want to see how that plays out. One of the things that you and I didn't touch on is that I am also afraid that if the Fed is not sunset soon, I'm afraid that they'll get their back up in defense of the dollar in terms of regulatory structure that they try to burden a Bitcoin with, for example, and undermine the development of that market. And I think that would be a real shame. So that's one of the reasons why there must be members of your audience who are frustrated when we talk about stepping stones and layers of legislative steps that are required to get rid of the Fed because we all want to go faster. This is one of the big reasons why it's important to go as fast as we can, because the Fed is a very politically powerful organization. As much as power as they have to screw up our economy, whether it's through bailouts or bad monetary policy, they are also politically powerful and can defend their position ruthlessly. So I worry about the implications for competitive currencies in that regard. American financial institutions, for that matter, international financial institutions, but especially American financial institutions, move as a herd. So you can imagine markets moving one way or another just because New York had a bee in its bonnet. The other problem I have is that all of these institutions are subject to federal regulation of one sort or another, largely affected by the Fed. So if the Fed, as we were discussing just a moment ago, if the Fed wanted to undermine the development of the Bitcoin market, one thing it could do is not recognize and it's doing this, it could refuse to recognize holdings of Bitcoin on a financial institution's asset as anything but a speculative investment, as opposed to, some sort of highly liquid investment, thereby requiring a financial institution to carry more capital against it, making it more expensive to hold that investment.
Yes.
So this is very important. These markets seem opaque because they're intricate and sometimes they're difficult to understand. But the truth of the matter is that the very basics of supply and demand, of deregulation, of avoiding markets being interfered with by the federal government or any other government or financial institutions that operate independently with tremendous power. These are the basics that you would object to in any market, right?
Yes.
And there's no real fundamental reason why these markets should be treated any differently. So we all need to stick to our guns in terms of our principles. Mm-hmm. But to your point, let's not be intimidated, right? Or told, go away, you people don't understand how these sophisticated things work. No, the basic principles that we all believe in of libertarianism and free markets and property rights, and by the way, basic ethics, they apply to these markets just like any other.